Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global market reporter at Nasdaq. Joining us for this segment, we have Brian Stutland, Chief Investment Officer of Equity Armor Investments. Brian, it's great to see you as always. Welcome back to Trade Talks. And the last time that we spoke, as we do every 2 weeks, was on March 9th. A lot has happened in trading since then. It feels as if we put together a whole year's worth of news and trading in 2 weeks.
It really does, Jill. I mean, it's been massive moves in the market and for the Nasdaq in general. Basically the outcome that we've had, is such a landscape shift of what's been going on in the banking sector and how that's affected the market. And that's put huge downward pressure on interest rates, especially at the long end of the curve here. And we've talked about this a number of times over the last, 6-9 months or so, that if the 10-year note can sort of be contained, if the long end of the curve can sort of be contained, at least go sideways to lower, that was going to be very good benefit for growth stocks. And we're seeing that in the Nasdaq. The Nasdaq has had a massive move this year. I don't see that really changing. The leadership of the semiconductor index and some of the big mega cap names of tech have led the way in this sort of interest rate environment. And as long as there's this overhang about, can the banking sector hold up? Can all the lending or whatnot be maintained? The companies with the best, biggest balance sheets are going to win out, and that's some of those top names in the Nasdaq.
Yeah, it's interesting that you pulled, the Nasdaq-100, where you're seeing that outperformance. That really has been the narrative, but it's not just your typical names where Tesla, Microsoft, Apple, Google, Netflix, the FANGs or whatever acronym you want to assign to, but you're really getting a diversity in terms of what's leading it.
You are, and that's why the Nasdaq is one of those leaders. I mean, yes, there are some of those big mega cap names in the Nasdaq-100. But you talk about some of all these other names. One thing that's not as big a presence versus something like the S&P 500 is the financials. And the financials have really struggled. If you look at sort of like this large cap value area to mid cap Russell 1000 value, that value area of the market has a lot of financials in there. That's where a lot of the risk, and obviously we've seen all the volatility, so to speak, in sort of this mid-tier commercial banking, regular banking area, that's sort of that mid-tier bank. Really struggle over these last few weeks. And so that shift of money continues to see movement towards growth, towards technologies, towards some of that diversification that you get in the Nasdaq-100 that is away from the financials.
I want to talk about some of those social media names that are in the Nasdaq-100 because, of course, we have what's happening with TikTok and their testimony on Capitol Hill today. There could be a number of implications, good or bad, to some of these social media companies.
Yeah, there really could be. I think it's actually going to be good for U.S.-based social media companies. Maybe some bad on things that would need to change as well as changes that might be made with TikTok. But, I was watching Capitol Hill all day today. It was not a good look for TikTok. I mean, you had Democrats, both sides of the party, Democrats, Republicans, really attacking after TikTok. And some of the answers back from the TikTok CEO were not good, in terms of painting a good picture for them. So I think there will be some enforcement, some bills coming down the pipeline now that will sort of mitigate what TikTok can or can't do. And that should be beneficial for names like Meta. I think that's why parts of the Nasdaq you're seeing sort of outperform today the rest of the broader market is what is going on in Capitol Hill. Now, there could be some other things that come down the pipeline that affect Meta as well, or Google and some of these other searches and data mining type companies, but not as harsh as what's going to happen to TikTok after what I watched today.
And it's so interesting, Brian, that you bring that up because both sides of the aisle, which rarely agree on everything, certainly came down on content moderation. And
Yep.
that I felt was the biggest press point. So when you think about social media companies in the U.S., and they've been debating Section 230 in the Supreme Court's hearing 2 big cases around that this year,
Yep.
how that could potentially impact U.S. companies as it comes to moderation, because both sides of the aisle, they want moderation definitely for different reasons. But I think, to your point, it's going to be interesting to see what the impact looks like on U.S.-based companies as well.
Sure. They have to walk the fine line of the First Amendment, right? And so freedom of speech. And so as they're doing that, they're going to have a difficult time in sort of moderating all the content in general and put sort of restrictions on certain things that maybe they would like to see. But that doesn't preclude them from, lashing out and trying to narrow in, at least on the TikTok side, that there is some relationship and some security risks behind people using TikTok. And that could be one where they sort of carve out in a separate bucket and sort of isolate away from some of the other things that they might have to or look to try and pass against some of the social media companies to sort of limit some of the content. it's going to be a lot easier to do that against somebody like TikTok, who has a foreign entity that is invested in them, so to speak, through ByteDance, and be able to limit that versus some of the other general U.S.-based companies.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.